So here I have a backtest, and this backtest, actually I move myself down. This backtest is done with every single tick based on real data. Now I want to talk about the different types of modeling, and it's found over here. So you have a bunch of options. If I were to click on open prices only, the results would be really different. Let's click on it, and it's going to happen really fast, you can see. So results look completely different. Why is that the case, and how does that affect you if you're going to run your own simulation? So before we really get into it, a couple of things you need to know about backtesting and about simulations. So the first thing is the data that you get is going to be the most important thing. If you get data from your broker with the actual spreads that they offer, that's much better than if you were to get the data from a third-party source or a third party that gives you the best data, or they claim to give you the best data, simply because they have different spreads than your broker. So even if they do give you a 100% modeling, accuracy and quality historic data, is that really better than your actual broker where you're going to put your money? What's more reflective of the future? Because this simulation that's happening in the past that we call a backtest is about your experience, your actual deployment of capital. So that's something very important to keep in mind. The data is the most important thing in a backtest. One other thing to think about is this term, in-sample data, or in-sample period, really in-sample data. What that means is you chose a specific period of time where your broker did really, or your expert advisor, your algorithm, the trade bot, did really well in. And just a really crude example would be if you were to run an expert advisor that uses moving averages. If price is above the moving average, buy. If price is below the moving average, sell. And you just chose a period of time where it's really trendy. The price just is going straight up. There's no consolidation in that time period. You would win, obviously. You don't really need a sophisticated expert advisor or algorithm or set of rules. It's because you just chose, knowing what happened in the past, the perfect time period for your expert advisor. Now, what you want to do with backtesting is actually the opposite. You want to choose the worst time period for your expert advisor and see how your algorithm, your set of rules, your system, your trade system, handles itself in that time period. Because you already know that the system works well and in your favor in the market type that you want, or the weather, the climate. So that's, I would say, another really important thing to keep in mind is just have a sense of what in-sample data means. So we'll go back to the example that I have on my screen and show you a bit more about the different types of modeling, and just have that in the back of your head. Okay, all right, crew, let's begin. So here we have an expert advisor that the way it works, I'll just show you visually by clicking on this button here. If I go to settings, click on this button, then what happens is you get a live view of the backtest. It's a really simple idea. So you just plot lines in the past, or you plot a look back period, and then you connect it to the current price, and it just moves dynamically. So as the current price moves, these lines move. Now, if all three lines are pointing up, then this button switches to buy. So it just toggles between sell and buy. And this switches to active. Now, if one of the lines goes from pointing up to not pointing up, in other words, crosses that threshold of being horizontal, then it goes inactive. and it doesn't enter anymore. And where it enters is going to be the first anchor point, which is here, here, and here. And it'll enter twice on the most recent one, just because that's how the parameters are set up. There's actually 4 lines. There's a hidden line hidden behind this orange line. Okay, so that's pretty much it. That's the idea for this expert advisor. And you can see how it behaves using the backtest. And that's essentially how backtests work. It's just modeling what happened in the past. So we're in January 1st right now. All of this is January 1st. And you can see just from just off the bat, right off the bat, that the data isn't exactly realistic, right? It looks a little weird over here. So that's very important to keep in mind. Data is only going to be so good. So you can zoom in and out, or go fast and go slow. And then that way you can model and look for ideas. You can look for modifications of your expert advisor, and you can really just see everything that's happening. You're modeling what happened in the past. You're running the simulation so you can improve your idea and make some changes. So this is a backtest. And now we'll go over the settings for the backtest. Particularly, we'll go over these settings over here, the modeling settings. So if I were to click on every tick, I'm going to remove the visual because you saw what it looks like. What's happening is it's generating ticks, or it's generating price levels for the number of ticks that it's given. In other words, the data from the broker, let's say there's 1,000 ticks that happen in this 1 minute. It doesn't put the next tick based on what happened in real life. MT5 will generate just where it thinks the tick should be. It still uses the correct amount of ticks, so 1,000 ticks, but it's not real. It's not based on the data that your broker has archived and is sending over to you. The second modeling option is every tick based on real data. So that actually does depend entirely on your broker. The reason you might have wanted to choose this one is because your broker didn't archive very well. But if your broker did, you can click on this, and then now you're getting the most accurate version of a test possible. So right now we're running the most accurate version. This is based on real tick data, and you'll see that I'll open up the visual really quick just so you can see this in action. So you can see it's going to move a little better than the last time, the last chart, because the last one I didn't choose the same setting. So the lines are just moving much more dynamically. They look live, kind of because they are the closest thing to live. All right, we click play. And so yeah, here we are. You can see it's moving on every tick. So this is the broker data. Now you can see that the spreads aren't really changing. So there's the bid and there's the ask price. Bid is gray over here, the ask price over here. So that's not accurate. So if there were to be an entry or an exit, it's not going to be live spreads or taking data including the live spreads. Now what does happen sometimes is the broker just doesn't have that data for that time period, but then later on they do start having data, they archive the data or something, and then what you'll see is the bid and ask price do start to fluctuate. The spread becomes a real spread, more reflective of what would happen. And so that's just something to pay attention to when you are running a backtest. So I'll remove the visual thing, click on start, and we'll just have this running in the background as we go over the next modeling options. Oh, we can't do that actually. So the next modeling option is 1 minute open, high, low, close. Essentially what that means is you have 4 ticks: the open, so opening price, high price, the low price, and the close price. And this is a faster, much faster way of just getting your expert advisor, your simulation really, to happen. So your expert advisor runs in that period at a much, much faster rate. Might as well show you. So you can see it's a lot faster. Again, the results are going to be extremely different simply because of the data, very different data. We haven't changed any of the parameters, we didn't change anything. The only thing we're changing is the data. And then over here you have open prices only. So that's even more crude. One point of reference. It's even faster though. You can see once again, now that finished really, really quickly. And then the last one over here, math calculations. So this actually isn't a backtest. Now, a backtest is a simulation of the past. Math calculations is a bit different. It simulates not the historic data, so you already know what historic data is. We've spent a lot of time on the data. What it simulates is the speed of your expert advisor. Now, if you're running a simple algorithm like this one, it's irrelevant. You're not going to be, or it's not really something you would use. But if you're running a really complex system, has a lot of latency issues, you may want the fastest expert advisor, and then this would be where that comes in. So you are modeling, still you're modeling your expert advisor, but you're not really modeling the past with historic data. So that's pretty much it. That's the different types of data methods. The other thing to talk about, just to give you a general sense of what a backtest is and what it looks like, is this tab over here. So the backtest that we ran gave us a bunch of numbers, really. All of these values reflect the outcome of the strategy in that time period. So what happened during that time period when you ran your expert advisor? Well, you can see here you had an initial deposit of this much. Total net profit was this much. Gross profit, loss. There's a bunch of numbers that you could use to help you optimize. And quick tip here, copy all this, just screenshot, put it into ChatGPT, and ask what's something I can change. ChatGPT knows, and it'll help you create a better program, really. Okay, so here you have bars, a bunch of bars showing you the different months, different days, comparing those different months and different days. Really, this is a comparative analysis section where it just shows you the differences. And the bottom side here is also kind of like comparative analysis, but more, it just averages out all of the like how much did you win for this trade. Let's say you won 5. How much did you win for the next one? Around 6. Next one is around 7. A couple of outliers. Once you won 33. Now that one would be much further up. It would be an outlier. But you want to know just generally where how the EA performs. And so you look at these clumps, and then you can analyze and have a very quick view of how your EA is performing. So that information, all of this information, we can go over it in another video, but essentially that's the power of a backtest. This is what you want from a backtest. Of course, you also want this. It looks very nice, but yeah, that's pretty much it. Those are the main, I would say, aspects of a backtest. Now, if this video was helpful, leave a like, subscribe, comment, all these things, and also let me know what you want me to cover so I can cover those things. What do you think of EAs, algorithms? ChatGPT and how that's going to affect the algorithms moving forward. I'm very curious to know what you guys think. All right, crew, thanks for watching. I hope this video was helpful.